Kevin with the Daily Bit. We're back again for 420 edition of the paper. We figured that we would do kind of a little twist today because obviously it's a little bit of a holiday for some folks around the country and around the world. And blockchain and cannabis industries really do have this mesh going on, at least starting in 2017. There's really been kind of an uptick there. So we figured we'd do a special edition and kind of focus on going green initiatives. So again, just very quickly, none of this is financial advice. We're just covering events that we talked about in our newsletter. If you want financial advice, go seek it elsewhere. And if you want to subscribe to the newsletter or you want to share it with your friends, check out our website, thedailybit.news, and you can plug your email address right in there in the sign-up box. Now, for our table of contents, again, word on the street, we're going to look at Green Friday for Where's Blockchain. We're going to look at all natural energy with the oceans. For Bulls and Bears, Dow Jones and Brave Browser partnered up. We're going to take a look at that. For our Bears, Silicon Valley, a couple VCs went over to DC, and they lobbied for what's being called a token safe harbor. So we'll take a look there. And for education, Proof of Delegated Stake, which is a spinoff of Proof of Stake mechanisms. Now, tweet of the day. This is coming from Anthony Pompliano. He says that modern warfare is basically just outlining what happened with Russia and Telegram because Russia wants to ban the Telegram ICO from the country. So again, Russia asked Telegram for their encrypted private data. The CEO simply said no, and because of that, they banned the use of Telegram in the country. And kind of as a counter to that, the CEO gave millions of dollars in Bitcoin grants to these VPN owners to help them get around the ban. So again, it's just figuring out ways to kind of get around your competitors or your adversaries right now in modern times. You can do it with technology and you can do it with capital. You don't necessarily need brute force mechanisms or weapons of kind of mass destruction or heavy artillery to do that. You can win with wit in this battlefield in 2018, which is definitely something that's changed from times past. For word on the street, again, so it is April 20th, and like we mentioned, there's a lot of crossover in the space. Cryptocurrencies really took the public by storm in around March or so when I believe the market cap broke above 25 billion for an all-time and then really just shot up from there. And likewise for the cannabis industry, there's 30 states right now that have a broad legalization in some contexts in their state for legal marijuana use. And again, that number is only going to keep on rising. I mean, the cork has already been unplugged. It's a matter of just getting those regulations in there. And when you think about how you can bake weed into blockchain, it's a very fragmented industry. So if you're trying to do something similar to Starbucks where they put in a blockchain system to track their coffee bean to the actual cup, there's difficulty in tracking legal marijuana seeds to the actual point of smoking or the actual store. It's because there's kind of this gray area or hazy area between what's considered legal and what's not. There's going to be a lot of illegal players involved there too. So you need systems to figure out how you can actually trace the legal products and how they get over to the store. And then on top of that, figure out how you can track the store goods when they're actually on the shelves and when they kind of get distributed off the shelves. And on top of that, it's important to understand what type of strain the customer is being given, the strength of that strain, a type of a particular strain. But again, there's different variables about the features of the product that you need to know too, and you need to track and be able to confirm if somebody's in the store and is looking to get this stuff. So again, these are different ways that blockchain can really be added in. And on top of that too, you can also have a decentralized marketplace where all these stores kind of come together and you can have what I imagine would be kind of open market trading for among these market participants who are interested in purchasing the products and also those that are selling them. They can kind of come together and see what's going on in the market. And if you're looking at crypto-related or cannabis-related cryptocurrencies, we have Podcoin, POT, Cannabis Coin, CANN, Dopecoin, DOPE, and Hempcoin, THC. All of them are very, very much related to weed and pot. And if you actually take a look at TradingView and go back to around before April, leading up to April every single year, all of these on the BTC ratio shoot up. So again, it's just when the time is right, the demand really comes into play. And if you're looking for a trading strategy or something like that, just thinking outside of the box is pretty interesting. Now for where's blockchain? All natural energy. So an issue with, I guess, organizations and charitable donations for the environment is that they're too low. It's really only a trickle about 3% of the total, and of all charitable donations is going to these organizations. So that's going to be a big issue for these organizations that are doing this full time. They're fully committed. They're focused on saving the oceans and saving the environment. But if there's no money coming in, then you're going to be pressured with your other capital out, with your other business expenses, and you're not really going to be able to be self-sustaining unless you kind of been around the space for a while, and you're you're more of a weathered veteran, I guess you could say, in the space. And Terra Expeditions, they're a foundation that has actually been involved in the environment for around 13 years or so, and they've been studying the oceans, they've been researching the oceans, and they want to find ways that we can get more funding over to these environmental charities. And in collaboration with, I believe it's an LA-based design firm, they put together this solution called the Ocean Miner, and it's basically a device or a hydraulic turbine that you stick underwater in areas where there's kind of this like heavy tides and a lot of strength in the currents, and that water power will mine bitcoins using that turbine, and there's a cord connected from the turbine over to a computer that's onshore, covered in a small box. And again, that computer would start cranking out electrical power, which it would use to try to solve the hash algorithm for Bitcoin's blockchain. And then any kind of payment that comes from there, they would try to filter that would essentially be filtered back into oceanic research. And again, so the solution isn't really an end all for kind of their project. It doesn't even actually cover all expenses. In total, it's about $250 a month. So again, this isn't really a long-term solution, so people shouldn't get all psyched. But again, it just shows that there's a lot of innovation going on here. And if we really do want to kind of clean up our acting and get the oceans together, it's going to have to be a collaborative effort among everybody involved. Now, for what else you should read today. The Jungle Book's author, Rudyard Kipling, he had some words of wisdom for the Jungle Book, and Lou Kerner actually applied that to crypto. So if you're looking for kind of insights from there, feel free to take a look. IBM is providing microloans to small businesses throughout Africa, and they're doing that with a microfinancing pilot built on the blockchain system. Africa is a great target for kind of unbanking or banking the unbanked, because right now there's a lot of underdevelopment in Africa. And there's also a very high presence of mobile phones. So integrating blockchain systems with these phones and creating this network where citizens and Africans can begin creating their own financing community is going to be really empowering, and it's going to unlock a lot of human and social capital as well. Rare Bits is a decentralized marketplace for crypto assets, specifically think crypto kitties, think crypto zombies is another non-fungible idea here with crypto assets. But they raised $6 million in a funding round led by Spark Capital, also involved in the crypto space. So again, just seeing more M&A, or not M&A, but more capital issuances for these projects that could show some promise. Still early on, but again, interesting to see. An electric vehicle charging station that communicates with customers using the IOTA's protocol is launching in the Netherlands. So here we're thinking Internet of Things. The charger, the actual charging station, would be able to be connected to your cell phone or another network. Again, it's these devices talking to each other, and then once they are all kind of connected on the blockchain together through one system, then you're going to be able to see more confirmations and again, this immutable ledger idea. Vertha OG. Vertha is a blockchain analyst, a cryptocurrency trader. Vertha posted an investment analysis of Bancor. It's a protocol with smart contract functionality that provides token liquidity. So again, thinking the Bancor Relay, it's essentially an aggregator of markets and kind of pulls markets together into one funnel, and then improves the liquidity offered for all these not only buyers but also sellers. You kind of merge them together. Long biased hedge funds had a bit of a shaky first quarter, but this article talks about those that specialized in market making and arbitrage strategies to remain above water. So that's where you start to have those contrarian views or non-directly long investment strategies start to play out once the market does begin to correct, and other alternatives kind of have to come into play to make money. Swift is the financial messaging network used by institutions to transmit data. This has been around forever. I'm not as familiar with Swift as I am with blockchain and that whole infrastructure, but Swift is, I see this as kind of a scare, at least in Swift size, for blockchain. So they're launching a cross-border real-time payment service with Asia Pacific clients that is going to hopefully, I mean, if it's successful, then they wouldn't have to rely on blockchain and they wouldn't kind of lose market share and customers to blockchain systems. Now for bulls and bears, so Dow Jones. If anybody isn't familiar with who Dow Jones is, it's not actually a person. Dow Jones is a global distributor of market-related press and analysis. So again, it's really just focused on business news, market news, and insights from there. Any data, any interesting feeds. There's a very diverse, I guess, umbrella of publications that fall underneath Dow Jones. So two of those are Barron's and MarketWatch, and these are actually involved in the partnership, and we'll kind of talk about that in a second. And Brave Browser, and also Dow Jones, they have major distribution channels. So again, if you're thinking print, digital, mobile, any direct kind of any medium of exchange that you can kind of get your message across, Dow Jones is there. So looking at Brave Browser, they're a privacy-oriented web browser. So again, Google, Facebook, Twitter, you wouldn't really have to deal with anything going on there with stealing user data if you were just searching on Google, or at least searching on Brave. That wouldn't happen. They also support a decentralized digital ad platform, and the idea here is that users are rewarded in BAT tokens if they give their attention to these advertisers. So again, you're incentivized to direct your attention, which again is super valuable. That's what's important these days when you're looking at value creation. To select advertisers who are offering to pay them BAT tokens for their attention. So again, it's a more refined type of advertising, and it's definitely a big shift from these centralized conglomerates that are packaging our data and then selling that out to advertisers, where users don't get a cut for that. So that's kind of the idea of giving users control over their data and giving them the option to kind of tune into this and be compensated for it too in these new systems. And again, that's basically why we like this partnership. The synergies, on top of that, they're on point. It's about the same demographic. You look at who wants to get involved in blockchains. It's really 18 to 34-year-old males right now. And there's a lot of kind of crossover there with, again, Barron's, MarketWatch, the Wall Street Journal is also under Brave's umbrella. So again, there's a lot of mix here for these projects. So the initial targeting makes sense, and that's a good bootstrap for the project. And also, the first adopters here were able to get a free 2-year subscription to either MarketWatch and Barron's. I actually tried to run in there yesterday and get a subscription myself. I mean, it's almost too good to pass up, but they were all done. They were all wet. So I mean, huge demand, and it's only going to keep on happening. And this is only the first really major example of a partnership like this, and we're still super early. I mean, the public trials for BAT ads haven't even rolled out yet, and I mean, it's just we still have a ways to go before actual blockchain systems are actually rolled out in the next coming years. Now, Silicon Valley. So everybody knows that ICOs, look, they've been getting the rough end of the stick by the SEC because a lot of these projects raised money in ICO funding and they labeled themselves as utility tokens, but at the end of the day, they were raising money with the intent to actually profit off of that money through the use or efforts of a third party. And that's really what the Howey test is, just making sure whether or not these securities or these cryptocurrencies or virtual currencies are securities or utility tokens at the end of the day. And right now, they're dealing with a lot of problems with the SEC because of this karma that's catching up to them. They kind of have to go through these hoops that they didn't want to hop through initially. So some Silicon Valley VCs, Andreessen Horowitz was at the lead of this, but again, they created a lobbyist group called the Venture Capital Working Group. And again, this was really to pitch the idea of a safe harbor for particular digital currencies that have been around for a while and don't really make sense for, well, it's not that they've been around for a while. It's the fact that they truly think that they shouldn't be classified as security tokens because they've fallen outside of the scope of what should be classified as a security. So one of the contenders here for a safe harbor, at least for the lobbyists, is Ethereum, Ether. The reason being that it's Ether, they argue, falls outside the scope, again, of a security token because it's already so decentralized. Ether's been around for probably 5 years or so right now. I think it came out around 2013, 2014. So again, there's been a lot of growth and there's been a lot of folks building up on top of Ethereum, and the supply of the actual coin has been dispersed throughout the network. So again, it's really become more decentralized, and there's not anybody that's in direct control of the day-to-day activities of Ether. So it's not like there's somebody coming into the office saying, "Hey, we're going to make money for all these shareholders." They're really just building up their infrastructure and their platform to scale their network, and then from there we'll be able to see a lot more innovation and a lot more growth in the rest of the system, because a lot of people look to Ethereum's blockchain and Ethereum scaling solutions to implement those and kind of hard fork that open source code and use it in for their particular cryptocurrencies, which drives a lot of innovation and also increases competition in the space. So it's very healthy. But at the end of the day, if the SEC doesn't go through with this, then that could be a watershed moment for the space, because it could be stifling growth in the United States. Entrepreneurs could be pushed out. They want to perhaps go to Malta or another area that's a little more agreeable. But again, there's a huge risk here if at least these VC guys are concerned about what could happen if the SEC kind of acts in a way that they don't want them to with Ether and other currencies that have been around for a while. Now for education, so proof of delegated stake, it's a spin on proof of stake in that not every single node in the network that has money is able to kind of stake a claim and validate blocks. For proof of delegated stake, you select a group of delegates to validate blocks on behalf of everybody in the network. So again, it's kind of like our House of Representatives, where we vote on folks that want to basically represent us in Congress. So again, ideally there's 21 to 100 delegates elected in the networks using DPoS consensus. The more concentrated it is, the more efficient it is. And the metaphor that I used in the paper today is, if you were lining up in class when you were in middle school, this is really the only time I did this. So like if you were lining up in height order and you had 15 kids in the class, it's a little complicated to find the guy or girl kind of in front or behind you in the line. But once it's all set up, it's not it's not rocket science, but it's a lot more complicated when there's 100 or 200 people and you kind of get the whole grade involved. So it's really just a matter of figuring out that order by which these delegates can assemble themselves, and then from there allocate slots to publish their personal block and also report accurate data. So again, if there's only a handful of people or nodes or delegates getting involved here, it's easier to kind of get that lineup set, and there's I guess fewer risks in the system. So again, there's some pros, there's some cons. It's scalable, PODS. It's energy efficient, and there's cheap transactions. But at the same time, it's also partially centralized, and that's due to the scalability trilemma that Vitalik Buterin was talking about, where you can really only have 2 or 3 things with a blockchain network. It can be centralized, it could be decentralized, it could be scalable, and I believe the third one is, I want to say quick processing speeds or quick transaction speeds, but or the security is on point as well. So again, it's there's trade-offs at the end of the day that you really have to look at. And right now, blockchains really can only develop 2 of these 3 solutions. And DPoS in action, BitShare, PODS, right? Okay, apologies there. But again, BitShares, EOS, and CMIT, they all use proof of delegated stake. And it makes sense that they all do, because they're all created by Dan Larimer. Dan is a genius coder, a genius developer who actually also created proof of delegated stake. So again, it just goes to show how versatile and how all these developers in the space are super intelligent, and they can wear many hats throughout the system and within the network and kind of bounce around projects where they see fit. So again, that also goes to show that these developers can kind of abandon the network. They don't necessarily have to stick around if they don't want to. So again, more power to the people in these blockchain systems. So that's it for our 420 edition. I hope you guys enjoyed it. Again, if you like this, if you thought it was valuable, please like this, share this with your friends. If you want to post this on your social channel, even better, but again, no pressure. Really thank you guys again. If you want to subscribe to our website, check out the dailybit.news. And if you want to follow along on our other social channels, by all means do that. So that's all for today. We'll be back on Monday for, I guess, the April 23rd edition. And that's all for now. Thanks again, guys, and hope you all have a good weekend. And yeah, that's about it. All right, cheers.